gives them a satisfaction they couldn't get any other way.
Monitors I have behind me are 4K screens and 43.
It doesn't matter how much you know about implementation or writing layers or any of these kind of video game terms. None of that matters if you can't write music well. So the first thing for me is always learning your craft. And it doesn't matter where the music is going ultimately. This is when it's in your head and you're still thinking about it. You've got to know how to basically see it through completion practically on your own these days and have it stand on its own with everything else that's out there.
Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. So if you can hear me, then you are awake, you are alive, you are conscious of the fact that it's Friday and it's an epic day to get some trades on. So without further ado, welcome to Forex.Today, the YouTube community of over 18,000 foreign exchange traders. We get together this time of day to align our satellites, synchronize our watches, and get our pips on. Let's go. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Is it still playing music in the background? Somebody's babbling in the background. Hang on. All right. Anyways, there, I found a way to mute it. All right, so good morning, everybody. My name is Wayne McDonald. I'm a currency trader just like you, and I'm here to set up all of next week. I want to make some pips. So we are going to conduct mostly technical analysis today, and with the overriding goal of planning out next week. So what's already happened today was planned yesterday, and now we are thinking about Monday, Tuesday, and Wednesday. How cool is that? Thank you for being part of the community. Thank you for clicking the like button. Thank you for leaving comments on the recordings. Thank you for being you, providing positive energy. Thank you for your awesome questions. I do my best to serve. I'd like to thank Traders Way for being part of our community as well. At some point, every trader needs to find a broker. And ideally, your execution partner is somebody that you respect and trust. Maybe that's Traders Way. Visit tradersway.com. Let them earn your loyalty and respect like they earned mine. Maybe we should have some of that music in the background. I just don't need that guy babbling. All right. Just playing with the new toy. Maybe have some background music a little bit. Okie dokie. So good morning, everybody. Yep. Whip, yep. So dollar is still strong. Wait for it. Right? Your customer says yesterday's plan was for dollar weakness. Yeah. That's why they call it a plan. Okay? So if you don't have it, then you probably didn't get a lot of setups, or if you did get setups, you are now busting out, break even or small losses. Yeah, that's called reality. Okay. Let's do our WTI. It is continuing going up, and we are getting closer and closer to that line in the sand, in which I explained to you, if you did your research the way I have taught you to do your research, that this would have not just it would have a fundamental reason for this shift. Okay? There's a fundamental reason for this shift, in particular as we get closer and closer to this line. Neat, right? Neat. How cool is that? Mark says, hey, I bought the course last week, and now you've had the best week you've had in a very long time. Haha, thumbs up. Me likey. Very cool, man. Cool. So that, sure, is based on seasonality, but it also might be indicative of risk appetite, which would lead to dollar weakness. So you might say, well, okay, dollar's not necessarily weak today, but if this continues its seasonal move, that would support your hypotheses. Good morning, madam. Cool. Yep, but I'm waiting. That music in the background has voices. I asked it to only play instrumentals, so that's weird. Is that music in the background too distracting, or is it nice to just have something back there in the ether? Okay. Yeah, you can't hear it. It's just there. It's quiet on purpose. Yeah, you guys, you can't even hear it. Yeah, I was talking to my dad the other day. I'm like, what do you think of the frogs? He's like, what frogs? I'm like, there's a deafening sound of frogs right now. There's millions of frogs screaming. You can't hear them? He's like, no? Yeah, everything is okay. Yeah, it's really low. It is not copyright. That's the idea of this having a little bit of music in the background. So, yeah. All right, cool. So, right now, this is setting up just perfectly fine. Perfectly fine. Perfectly fine. Okay. You had a swing trade earlier. Okay. So, you had a trade Monday to Wednesday, which is a pretty basic swing trade. Okay. So, now what? Well, are you still bullish or has things changed? If things have not changed, then you're thinking this over the next little bit. So now you're looking for technical confirmation. Stuff like this would be very interesting to a bull. Okay? The thing about trade planning is trade planning are if-then statements if you're going to program it. It's an if-then statement. Well, if it does something like this, then you're going to trade. So right now you're still in intelligence gathering mode. You have an assumption, but that assumption it cannot be confirmed as reality in the moment. Yes, Mark, it's already there. It's in the War Room playlist. Okay. Yeah, always bullish but neutral for now. Yeah, well said, Marina. Okay. But I always remind myself there's a reasoning for all of this, right? There's a reason. This isn't just randomness. There's a reason, right? So if gold is going to come down to here, for example, there must be a reason. Okay? Could central banks suddenly sell off all that they purchased recently? Yeah, for sure. But there would have to be a reasoning for that. And we might be able to then go out and gather intelligence to confirm or deny that hypothesis. And if central banks are selling precious metals to buy their currency, to raise the value of the currency, then we would need to stop being bulls on this. Okay? But right now, we're assuming globally, over the next year or two, consumption will rise, and consumption will rise for everything. And as consumption rises for everything, demand for gold would go up, but because of the dollar being a reserve currency, the dollar would fall during that period as well. Okay? But I have a hunch that we're just not ready to break 2,000 right now. Okay, great. Okay, great, fine. So where are your prices? Okay. David says India buying gold right now. Well, I don't know if that's true anymore. We talked about that 2 or 3 weeks ago and 2 or 3 months ago. That may no longer be true. And that might be why we're sort of hesitating now around this price. Okay. What once was may no longer be. Okay? So, like, this may have been the top, is what I'm trying to say. Okay? So, that's all. We got to wait our time. And if nothing fundamentally has changed, then if dollar is strong in the last couple of days, including today, that only sets us up, right? Well, Daniel, that's what fundamental analysis is, right? So you have to ask yourself, what does Australia do? Daniel's like, how did you learn about the flow of money? What does Australia do? Okay, I kind of covered this in the swing trading group last night. I kind of talked about the genesis of my learning process. It was sort of like the origin story, if you will. And, it's by asking questions like that. Like, what does Australia do? Oh, they dig, right? They pick things up off the ground. They grow some things in the dirt. And then they sell it. Cool. Well, then who buys it? And you follow that kind of questioning. Okay. Okie dokie. Let us go back to the indices. And dollar's ripper strong right now. Okay. Pound really nice. Okay. Aussie quite getting hammered. Euro getting hammered. Of course, euro is just the opposite of dollar. Kitty cat doing all right, hanging in there. Yen was super weak, but taking some back, right? Okay. So it really comes down to what are you doing next? Okay. This is a Monday entry, as you can see. And the actual setup for next week is 90.50. So we have like this entry somewhere between 75 and 50 if you're a bull for next week. Okay. And you can see we already have a lot of things identified as support. So like we could just get rid of this, for example. And now we can say like this might work. This might work. This might work. And this song you played in the background reminds me of Far Cry 5 somehow. Like they're singing about faith or something. Faith will set you free. Sorry, if you're not a video gamer, you don't know what I'm talking about. But if you're a gamer, you're like, yeah, totally. Theta says, but I think you'll be OP in the opening. Perfectly fine. In fact, you would want that. Because like what we talked about last night or yesterday, is that this is meaningful. Because we talked about the sideways for weeks in advance, and that some time in this period, we would likely get this on the medium to longer term. So the fact that it happened at an exact price that you would expect at the time of the month that we expected, then we could say we got the let's say the seasonality of this thing. It is on the move. It's Oscar Mike, as we anticipated. Not technically, because nothing technically really confirmed any of this in advance, right? So now it's more like, so if next week opens out of position, well, what is that indicative of? What does that mean? It means everybody on the planet's buying it. Why? Because it's so obvious. Now, it's dangerous to state it that way because you can be arrogant in your point of view and buy it high and then suffer the inevitable pullback. But you can cautiously do it and say, all right, you have confidence in this, and it's meaningful actually based on June pricing, not just May pricing. So now what's sort of the next move? Well, yeah, if you buy this, you're out of position, but you're actually totally okay with that. Okay? Okay? Because this sucker's going to catch up. You see? So I already have the zero lag, and it's going to catch up, isn't it? It's going to cross over the lagging. Oops. And it's going to be up here. Okay. Okay. 90.50. Yeah, that's legit. It's legit. I don't think typically that would be the standard operating procedure, and that was the whole point of the meeting yesterday. But my spidey senses are tingling, and I'm like, that's too obvious, and it doesn't price in the seasonality. Okay, so it's obvious that that's the entry. I don't think you're going to get it. So you got to be a little more in tune than the textbook entry. Okay. And 90.70 might be the number, not 90.50. And you're like, but I want it to come all the way back. It might be too late for all of that. Okay. Too conservative, perhaps. Okay. Do I use fibs? Of course I use fibs. All right. Okay. Same thing here. 33 is probably your number. You may not get it. So right now what we're looking at is price action. So if you're just day trading this is the price action going on. That would be an area of interest. That would be an area of interest. So why don't we just call it 113.50? Okay. Somewhere in here, you're going to want to find some price action. Okay. You're going to want to look like this. You also will be, okay, tested in here. You will be tested in here. Okay. So it could be more like, oops, I want that in blue. You might be more like this. Okay. And that would be the rest of the day. Peter, join the group. We talk about it every week. Yeah, Aussie getting brought down too. So some of these might actually be setting up the standard trades. I'm worried about things like fib wars, obviously, right? That's right. Typically, you would have this set up in a range-bound fashion, waiting for a breakout. Okay, so one of the things we've covered on this in the past is you have a buying opportunity here or a buying opportunity here. The second one isn't until there's a breakout. That's why you wait. Okay? Aggressive, conservative. Okay? So maybe if it drops back down to 84, like if it's just having another hard day, then that might give us an opportunity to be buyers. If it dropped another 60 points, maybe by the end of the day, maybe Sunday, we're buyers again. Okay. Johnny says, hey, first Memorial Day here. Will that slow things down? Well, you won't have Americans trading on Monday, right? And also, banks are closed, right? So no traders and no banks. So how would you transfer money to your grandma in Poland? Right, Bubba. How do you send your Bubba some zloty? Well, you can't. Banks are closed, so there won't be a foreign exchange transfer, right? So would that slow things down? Well, yeah, volume will be down. For sure, right? So I will not be trading Monday. I will watch the open, yes. Monday, there won't be a webinar. There won't be a live stream, right? So does that mean I won't be trading? I will only be trading in the first few hours of the market open, and then that's that. Yeah. Great Britain is closed too. Well, there you go. Even better, right? But I'm ready for summer. I rented the cabana today at the pool. We got a private cabana. Yeah, baby. Going to get some margaritas. Told you. Going to have some food. Love it. My kids are bringing friends. It's going to be a good day at the club. Up in the club, right? Me and 50 Cent. Wait, he means country club, right? Can you imagine 50 Cent at the country club? You're like, oh my God, have you been shot 8 times? Are those bullet holes in your chest? Yeah. Oh, well, welcome to the club. Yeah, you're too young for a holiday, Daniel. Mm-hmm. All right. Didn't. So I finally got my Aussie buy that I set up a bajillion years ago. Right? A bajillion weeks ago or whatever. So now I got what I wanted, and now maybe I pay the penalty. But I waited and waited. We were talking about this last night too. I said, look, I've been waiting for this entry for a long time. We were here. And I said, look, if this breaks up to like what we thought, I'm not going to feel bad about missing this because I can only ask for the price I want to enter. I don't enter because it started to move. And I'm like, I'd be a fool to buy it in the middle. Okay. And if I did, it would be a form of gambling, right? And we talked about that. It's right. It's a guess. It's like, I bet you it'll go up. That's not what I want. So what I want instead is to buy at support. So I'm in at support. That's cool. Dollar's having a strong day today. That's fine. That's fine. It's cool, man. If I lose some money here, that's fine. I'm not afraid. I'm not afraid of anything in this world. There's nothing you can throw at me that I haven't already heard. Right? Right. I was watching a documentary on Formula One racers, and they're like, I'm not afraid of dying. I'm not afraid. I'm going to pass you. I will do whatever it takes to win this race. Right? And I think that's required to be a successful Formula One driver, right? Like, but it's so fast, right? Someone comes up hot and fast right next to you, and you have to slow down and let them through. They just won. They're passing you. Okay? So there was a theme in there, like, they're not afraid. Same thing like with fighter pilots, right? Right? They know how to, they know their weapons well that they fly around, and they have confidence in their ability. Okay? But there's a certain thing like you cannot drive afraid. Well, in this thing, like you can't be afraid of losses. You just have to pick, you have to choose how to lose. And that is something that I've always shared with you guys. It's not the entries that matter. In particular, it's not even the winning trades that matter. Okay? What matters is you choosing how to lose. Okay? So if I wait and buy its support and it doesn't work out, I'll take a small loss. Who cares? MoveOn.com. Okay, cool. So I'm in. Now I got to wait for it. And I'm all right. I'm in a buy zone. Okay, that's all right. I'm not afraid of anything in this world. Okay, nice. Cool. Great. Well, What do we know? I'm a buyer in here. So it could do one of these things, and that'll work, right? It could do one of these things next week. Fine. That's a plan B for me, but I'll do it. Okay, especially if we're talking Tuesday, Wednesday, I'll do it. Ciao. Okay, but what I'd rather see is like this. Well, of course, it won't reverse like that, but maybe, okay. But again, we may not have liftoff until until Wednesday, so this is also possible. So there's my plan A, my plan B done. Okay. Johnny says, if you see the gap and you don't take it, you're not a racer. It's very similar. When I was playing football, I was a halfback. I was a running back, which means, you know, they give me the ball and they say, run, Forrest, run. So the play might be designed that you got guys in front of you, right? Like this. And then you have a, we'll make the quarterback yellow because he's afraid. And we'll put, you know, a fullback here, and then I'll make me in blue because I get beat up. So I'm a halfback, okay? And, of course, there's a team in front of them, okay? Right? There's players here, 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 and here, and here, and here, here, right? And there's players here and here, and the guy back here, and you're like, oh, my God. So the play is designed where the quarterback is going to give me the ball. Okay? And then these guys, when the quarterback says, down, sit, right? When he says the right hike, all of a sudden, this play is designed where everyone pushes this way. Okay? This guy goes this way and is going to block this guy coming around. And my job is to go this way as well. I'll do me in blue. But the play isn't designed for me to run around, because what'll happen is by the time I get there, because I have a farther distance than everybody, by the time you get there, everyone has moved left and there's nowhere to go. So the thing is to get, you know, let's say halfway over, let's say 5 or 6 meters this way, everyone's moved to the left because everyone's running left. And then suddenly this guy has to pop right with this guy, push this guy. And I'm running. My job is to go, boom, through the hole. And it's going to be a split second. Split second. You may not even see it. You have to push. You have to squeeze through as you're running, boom, bounce off people and get through, and then run and pick up another 5 or 6 yards. But it's very difficult to see that hole. And like Johnny says, your job is to see it. If you can't see it and get through that hole, you're not a running back. And the idea is you can't banana turn. You have to go left, boom, 90 degrees. Just boom, right in that split second. There's a gap. For a split second, one guy stops and pushes the other guy over, and you have, right, a hole half the size of your body, and you just got to run like you're a gazelle. Pop right through and keep going. And if you can't do that, you're not a halfback. Morena says, so USD strength, what is it? I don't know. Okay. That's the thing. You have your thesis. So if your thesis is whatever I told you, then it's not a thesis. Okay? So I have a guess. How do I guess? Well, I do some research and I look at some things and I make a decision. That's my thesis. And I say, I want to sell the US dollar. And that's that. Okay? Now, if I do my thesis correct, if I do my research correct, I have a greater chance of 50-50 of being successful. Maybe 60-40, maybe 66% chance of being right, 33% chance of being wrong. Now, we've all tested having no strategy whatsoever, because you'll end up losing more, or at best working hundreds of hours and not making any money. You have to buy into that first, right? You have to buy in that idea that you may have tested your other, trading strategies of like just day trade, and maybe today you're a bull and maybe tomorrow you're a bear, or scalping, or day trading and scalping, or this or that, or maybe big stops, or maybe then little stops. And you're trying all these different things, but what you may have found is none of that works. Okay. Okay. So then maybe try this. Do one thing consistently well. Just that one thing. And don't do anything else. Because at the very least, you will have to develop discipline. You will have to develop patience. And when you do trade, it'll only be one way under certain circumstances, which means the likelihood of being correct is much higher than your randomness. See, if your trading is random and the market is random too, to get consistent results out of random times random is statistically impossible. What you've been trying is statistically impossible. Now, maybe your last guru taught you all that crap, and fine. Okay, it's statistically impossible. Okay? So instead, if the market's random, let's say, or nearly random, or has so many variables it seems random, okay, great. But now if you are consistent, applying one strategy in certain market conditions, then you have a much better statistical chance of having a decent result. Okay? So in this case, my thesis was between now and June 1st, I want to be short the US dollar. So on a day where I see dollar strength, does it mean I'm wrong? No. It means I'm going to get better prices than I expected. Did I expect dollar strength today? No, I did not. I just did a webinar yesterday for a couple of hours explaining that I didn't think I would get these red candles. So I said, well, if that's the case, we might have to adjust our tools. Okay, monthly to weekly to daily, for example. Okay, great. But it doesn't change anything fundamentally. It doesn't change the investment thesis. One red candle doesn't change anything because I'm still above the prices I want to actually be buying. So if anything, I'm getting an unexpected opportunity to make some money, to make additional money. Nuno says Biden speaking today about his plan. Yeah, did you hear about that? The Democrats and the Republicans are going to get together. Joe Biden wanted to spend $2 trillion on the infrastructure plan. The Republicans don't want to spend $2 trillion. And do you know what they're going to agree on? $1 trillion, but they're not going to spend money on roads and bridges. I almost melted when I heard that's what they're going to agree on. An infrastructure budget of $1 trillion, but not build any roads or bridges. Well, isn't that what infrastructure is? I'm like, what? So, yeah, I almost melted. So if, let's say, so Moreno's like, so why the dollar strength today? How the hell would I know? That's the thing. You don't know. There's so many variables. Like, when am I going to tell you? Oh, what? Maybe that's the Joe Biden speech. This is what you hear in the news, right? Well, Joe Biden's speaking today. Dollar's strong today. So they're connected. Is it profit taking? Totally could be. The thing with the profit taking, right? The thing with the profit taking is we had that opportunity 2 or 3 weeks ago. So like whoever's reacting now is just way late, and that's a bad place to take profit. That's really sloppy. Okay, so that's, in my opinion, a seller. But you have to also understand the real bulls are in here. I didn't think we'd have that kind of opportunity. I thought we'd have some more aggression. Okay. So I think what's happened is bears did exit long time ago. Bulls did exit a long time ago. Okay, way over here. And this is bears getting their game on. Okay? Remember, the charts are predicting R1, S1. That's what the charts say, guys. All right? I assume you see all these things. That's an inside week. So what I'm looking at is, well, shit. This is awesome. Okay? And you might read, the media might say, well, this move here is Joe Biden. It could be a many things, and maybe it is. Who am I to say? But most likely, it's just bears doing what they had planned. They're going to get out. They're going to take profit, and bulls are going to buy it, and it's going to go up for 4 weeks. And in fact, the next 2 weeks are going to be ridiculously green. Okay? And we're going to top out early. But that's my thesis. What's your thesis? How are you predicting the future? Right? And so Daniel's asking good questions. Well, how do you get to that decision? Well, I do my research. What research? Anything. But anything led to my decision, and I have this thesis. So now it will dictate. I'm a buyer right now, guys. And you're like, but what about the giant red candle? I'm like, I love it. That's freaking awesome. Okay? And I'm cursing to put exclamation points behind the idea I'm sharing. Okay? Some people see the red candle and say, well, that changes everything. And what I see is a giant red candle and I go, awesome. Oh my God, what a gift. What a gift. That's awesome. Okay. Why? Well, because that doesn't change anything for me. Okay. It makes it a little easier, in fact, because I had to talk yesterday about, how do you catch these trades that are going to open out of position? Well, guess what? They're not out of position anymore. So what is it that we were asking for? Well, we were asking for the boring trades. So I guess, I think what I talked about yesterday in the live group, in the live swing trading group, is a valid point in situations. How do you anticipate when to be more aggressive and be less aggressive? And I thought we'd need to be more aggressive this month because we're catching a breakout. Okay. And we already set it up, but it was early, not too early, but not. So people have this disconnect that by May 18th, you should be trading June already. And we got all those trades, right? So I'm like, well, you know what? It might not pull back. You might not get your boring textbook trade set up because we already got that opportunity a week ago. So why would it come all the way back today or next week to give you the opportunity, right? Well, in this case, then you got exactly what you wanted. Good. Now set it up. Okay? You might have the right price. Okay? 121.50 to probably 120. I don't think you go that far, but let's say 121.50 to 121 or 120.50. That's a 100 pip spread. Okay. This looks pretty good though, but let's just say somewhere in that 100 pips, you want to go long. So this might work. This might work. This might work. So you start lining those up. What would you do here? You know the why. What would you do here and why? What would you do here? And this is about if you get to the price. See, we know the prices. The prices are the easiest thing in trading. You know the prices in which you would consider buying. You already know why. That's your bias. So you know you're a buyer. That's not in question. And you know the prices. Like, what other prices would you have expected? The out of position one, but that was trickier. Okay. So now that we're down here today, well, you know between now and Sunday afternoon, okay, that you will buy either 121.50, you will buy 121, or you will buy 120.50. Okay? Okay? Do you agree that those are the opportunities for bulls? If you do, you now have the prices. At what time, or right? When are we going to hit those prices? Well, we don't know that anymore. So if we don't know that yet, let's say. So therefore, we have time down here and we have price here. And you have to make a decision, buy or sell. So we know that we're already a buyer. Okay. Now you might be a seller on this. Well, then you have to set it up differently. Okay. So I'm a buyer. Do I know if I'll have an opportunity? No, but I know the prices. I don't know when or even if I'll get the price, but I know what the prices are. I know what prices I would consider buying. That puts me now in control. I'm not in control of this market. That's why I'm like, if you're reacting to the market to try to make money, but the market is, let's say, unpredictable or difficult to predict, then now you're acting randomly in a market that is somewhat random or so complex it seems to be random. So there's just no way you're going to be consistent. You understand that? Just no way. It's statistically foolish for you to think that way. So now I can say, well, I'm the boss. I'm the consistent one. I don't know if the market's consistent, but I am in control and I'm consistent. So I'll say, all right, I got my first price. This might be an opportunity. Now, how do I figure out time? That's what technical analysis is. When do I buy? Well, that's technical analysis. So now you drop into a 5-minute or a 15 and what? You can use moving crossovers. You can use your alligator. You can use stochastics. You could use MACD. You can use price action. You can use candlestick patterns. But like, what more do you need? Right? See, at that point, it's easy. Get in the game. Get going. You got the price. So you're like, okay, that's good. I got my price. Okay? Good. Drop into a single. Okay, great. So what are you going to look for? How about somewhere in that game? Okay? You know that could happen here, right? You guys like double bottom, higher high, higher low? This is even better. Okay. But that's how you use technical analysis. Now you dive in and you say, you dive in and say, somewhere around here, if I see a reversal pattern, I'm taking a shot. So Darko says maybe at the end of the New York session. I'm not talking about time that way. I'm saying, when do you pull the trigger? What second? Stuart is a Wyckoff pattern. Oh yeah, really? He invented double bottoms? Okay. See, what happens is you're just including different time frames. So you might see this on a 5-minute as a double bottom 1, 2, 3. But you remember, some people are not on that. They're trading the hourly or the 4-hour or even the daily. So they're waiting for the same thing, which means you'd have to get the double bottom, challenge up here, be re-challenged, and then it takes off. And why does it do that? Because it's the same double bottom that you traded over here, but over here, on a 4 hour. So this is a 5-minute double bottom, right? 5M, and this is a 4H. So that means today it would go up, test 122 maybe, and then on Sunday and Monday come back down to here, and then by Tuesday or Wednesday we're up here, and someone will say, oh, well, that was a double bottom. Yeah, it was a double bottom maybe on Friday, a double bottom on Monday, and by Wednesday we're up with the angels. Okay. Why? What do you mean wait for the new pivot? You already have it. Okay. Okay. Like, for example, 121.39 is currently Monday's M2. 131.31 is currently June's central pivot. Okay, Hendrik? Hendrik says, wait. What do you mean wait? We're already there. We're done. We don't have to wait. Okay? So let me get rid of this now. Delete. Okay? It's already there. That's what I'm saying. You got the price you want. What more do you want? Okay? The next price you want is 121.26. And that's because we're in an R1, S1 inside week. You got that? Okay, this is what is supposed to happen this week based on pivot points. Okay? So you have to filter through this. Are you a bull or a bear? Okay. So plan A, as I mentioned, is, well, somewhere in these prices. Somewhere in there, I'd like to be long. Why? Because of that, and because of that. Good enough for the girls I go with. Okay. Plan B was down here, wasn't it? It was lower. And plan B incorporates a bounce. Let's do this in blue. A bounce. Bears sell one more time, and we get down to 120.50, which to me, if it happens Monday or Tuesday, is equal to a counter trend. And I'm already bullish. So if we counter trend on Monday or Tuesday, I'm not aiming for the central pivot. I'm aiming for the 4th of July. Once again, time-based exit. Not really, but what I'm saying is I'm not going for 50 pips. This is a bigger trade than that. So I have two plans, plan A, plan B. Okay, my job now is to execute that for effect. Low liquidity, may want to wait. No, that's why they invented stop losses. I'm not trying to be perfect. I'm trying to get in the trade. Okay? You got low liquidity? It's fine. We're not so big that your stop loss can't be fully filled because the market's thin. The one mini lot's fine. It'll get filled. Right? Yeah, Hendrik's got the edge, which is fine. I'd like to explain it better. Like, I'd be very nitpicky on words like "I believe." Okay? I'd rather you say, I'd rather you talk about a bearish sell zone, take it down next week, and then hit the counter trend and then rally it back up for a month. Right? The belief system is okay. Is the sort of what I'm trying to avoid. It's more like the analysis, okay? What I want to know is, Do you believe the euro dollar will be higher at the end of the year? Yes. Why? Oh, this, and this. Great. Done. Now we're set. So now the rest is technical analysis. Right? You see that? Is anyone going to take it? Anyone going to take it? Okay. The thesis here. Okay. Bottom out at 35. 35 is right here. Okay. Double bottom, higher high. So this is a 1, 2, 3. Okay. That's how I would set this up. Okay. 1 is the double bottom. Okay. And I will highlight it this way. Okay. 2 is the higher high. And I'll do it here. Okay. And 3 is what you're setting up now, which is the higher low. Okay. Where will the higher low be? It could be a roll reversal. It could be Fibonacci, and it could be a psych level. The psych level is the bottom, so I don't think it's going to be a psych level. Otherwise, it wouldn't be a 1, 2, 3. So what you got here is this. Man, come on. Drawing tool. There we go. This is what we got. That's the plan, Stan. Okay? The thing is, you have to see that before it's happened. I find at that point, Alton, it's too slow, but depending on your time frame. Okay? It always comes down to whatever gives you strength to do the job that needs to get done, right? Typically what happens is most people don't know what they're doing and they don't know why they're doing it. And they miss all of this. They're not even looking the right way. Okay. You should have known on the way down you wanted to buy it at 35. Okay. So if you wanted to buy it at 35 and then you saw it do this, like, oh my God, what's your next step? Buy the dip. But if you don't know on the way down you want to buy it at 35, then forget it. You don't know what's going on. You don't have a plan. You don't have a strategy, and it ain't going to work out well anyway, so you might as well do nothing. Okay? Okay? See? Huh? How do you feel now? Oh. It's called Miracle of Sound Redemption Blues. Moment of truth. Okay. If you remember the book, this is the bayonet trade. Hey, did you guys click like? Is this a likable stream today? You're too drunk with me. Yeah, we had one member, I forget who it was now, but he was having a good old time. It was right, and it was super late, middle of the night for him. And he's like, look, I'll be honest with you, I've been drinking, but I have some questions. I'm like, yeah, let her fly, buddy. Yeah, and it was great. It's good to see people have a good time. Right? You got to put the swing trading meeting above everything, right? I like the fact if you tell your buddies, you're like, dude, I know we've had 9 beers, but I got to go. I have a swing trading meeting and it's important to me. Like, I love that. I'm like, that's cool. Right? You got to put your trading first. You guys remember the opening scene from Boiler Room? Mom and Dad don't like that you're a stockbroker? F you, Mom and Dad! I don't think I've seen Margin Call, actually. Abdullah. Welcome to the community, Ali. Is that right, Highlander? Monday mushrooms? Yeah, Highlander never trades on Mondays. Got to get your trades on Sunday, right? Before Mushroom Monday. Mushroom Monday. Ba-da-da-da-da-da. Anybody pick up a tidbit right there? Look at this. Technical analysis, guys. Simple 1, 2, 3. But like if you didn't have 35 on your sites, then you missed all of that anyway. So what does it matter? Redemption. Okay, this pivot holding here. Okay. Very cool. Might be a swing setup. Not really. Cool. All is good. All is good. Do some exotics. Right. This is one we've set up from yesterday. And yeah, I said I'd probably have an opportunity today. So my decision-making process is somewhere in here. So I have the right price, but now I have to choose the right time. Okay. Okay. And that may be it, by the way. Okay. Lower low. Lower high. Lower low, right? Right? Okay. USD Kitty Cat? Sure. Let's take a look at Kitty Cat. Yeah. I don't know if I like the price, though. Let's change this. Let me change this to Confluence so I see all. Or most, anyways. Yeah, it's not the right price for me. Pass. Wait. I guess you could be trying this, but it's out of position anyways. I don't know. I don't want to be the first mover on this one. Okay. It's all right. It's all right, but I don't know. It's not good enough. It's fine. I'm going to pass on that one. Nothing wrong with it, though. Don't let me talk you out of it. Hendrix is what? Yeah, well, that makes sense. That's how you do it, Hendrick. Okay. Do. Look at this. Look at our euro recovering right on our prices. Cool, man. Cool beans. Cool beans. Looks hopeful, doesn't it? Euro holding. I'm stuck in my range on Aussie dollar. Okay. Okay. There's my range. It's all right. And you'll say, well, Wayne, why are you way up here? Well, look, I'm not going for perfection, but you have to understand it took me days and days and days and days to get that price. Right? It took me days to get that price. So anyways, we'll see. We'll see. We'll see how it goes. Took days of patience to get that price. Look at this. Took days to get that. Okay, so we'll see. And I think at some point too, this was the M2. The M2 is down here because it actually made a lower low, so it pulled it down. So this analysis is based on old data, but that's what happens anyway. So I still had to wait. Can you check Aussie yen? Well, it'd be the same thing, wouldn't it? Okay. Okay, it's exactly the same thing. Okay, this is mid-range, but one of the things we talked about yesterday in the live group is the meaning of this. Okay? With the assumption of that. Okay? So now you're making choices, right? You either think that or you come on. Or you're thinking this. One or the other. Wait, there's one more. There's one more on here. There's this. It's kind of the same. I guess it's exactly the same. So, yeah, it's exactly the same. So, one is the breakout trade. Okay. So it'll look like this. Okay. The second one, okay, is the range trade. Oops. And as you know about range trading, you buy at the bottom or you sell at the top. Okay, and that will look like this. You were talking about that low a couple of days ago. Yeah, of course. That's what I'm saying, like, this, let me do it in purple. This has meaning based on what you don't see to the right. And if you're looking right, which means you're looking into the future, this had bigger meaning than just a range trade. It was a range trade filtered through trend. Trend based on trend based on fundamentals, trend based on seasonality. So truly, that was an opportunity. That's why we talked about it many days ago. So now this has occurred. The thing is, this is still a guess based on assumptions. So it can still come all the way back down, in which you'd probably try again. You'd buy it at 84 again for the third, fourth, or fifth time. But what you're assuming down here is that there will be a breakout. So now if you buy it here with that assumption, it's more of a bet. It's technically a crappy trade. But if you get the breakout here, which confirms this assumption, then yes, you still have this to worry about, but you shouldn't worry because your conviction. So you buy it and you let it run. And if it comes down, knocks you out, it's because you were so conservative. You should have been more aggressive and bought earlier. And to have that, you have to have your research. So one of the things I'm trying to push is that you should know all of this. You should already have thought about this. You should already have planned it. You should have already had your prices. What price do you want to buy? Why do you want to buy it? And you're like, well, I did the fundamental research and I looked at the seasonality and I created a bias and, I saw that as support and I looked right and I saw the monthly and I then put that into the weekly and then I did this and then I did that and then you made these decisions. Okay? Okay? And when you do stuff like that, when you buy at support and it doesn't work out, it does this. And you end up losing very little or nothing. And you're like, wow, I was wrong. And it keeps doing this, and you never get an opportunity to buy. And you're like, man, I want to buy this, but it keeps falling. And when you're wrong, you just don't have very many opportunities, which is way better than losing a bunch of money. Wait, is it playing the same song again? It's going to make me go nuts. Hang on. Let me switch. Piano? Coolio. Everything seems right as rain again, huh? Yeah, that's right. Why would I buy the stock market, TT? Because I always buy in May. I always buy in August as well. Right? The last I looked, in 3 weeks, I bought, I think it was 6, maybe 7 stocks. And in my first 2 or 3, 4 weeks, because, I bought some day, waited a few more days, bought something else, waited a few days. But at the end of the month, my stock portfolio is up 10% and I have no leverage. Why do I buy in May like that? Because that's when I get the opportunities. Everything I bought was down at least 10% when I bought it. Okay? So that's when the deals were offered. That's when things were on sale. I like to buy Ralph Lauren when everything's on sale. I go to the discount rack where everything's ripped and stained and wrinkled. Oh, look, another extra, extra small. Oh, look, another extra, 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 extra large. I'm like, oh, this one is medium. It's a weird color and the style is kind of bad and the neck looks like it's stretched out because someone tried it on 9 times. Oh, but it's only $42 for a t-shirt. It's 60% off. I guess that's a good deal. Raymond, I don't pip and tell, Raymond. Maybe. Raymond's fishing. Yeah. Yeah. David says S&P ranges in May. What is your reasoning? I don't look at it that way. There's a difference, right? I don't see it as a range. I see it as an opportunity to buy at support. There's a difference. The difference being the timing. Okay. But you have to understand, I don't trade the stock market. I invest. Okay. For example, when I buy wine, I don't drink it for 5 or 6 or 7 years. I have wine in my cellar from 20 years ago. I have wine in my cellar from the 1970s. I'm not going to drink it, though. It's the same thing with stock. They're not trades. I'm going to hold them for 10 or 20 years. Okay? I collect stocks. Yeah. Okay. So there's a different attitude. Okay? I buy and I don't sell. It's not from my birth year, but I was born in the 70s. It's Portuguese, by the way. You guys like Portuguese wine? Oh, look at this. I have a Portuguese Petit Syrah still sitting on my desk. Does anyone know their Portuguese wine? Nuno, maybe? I can go into the cellar. I don't know what year it is. I'm pretty sure it's early 70s, maybe late 70s. You guys want to see it? I don't even remember where I got it. I've had the bottle probably since the 90s. Yeah, you guys know your wine? Yeah, I'll grab it from the cellar. Yeah, I don't remember where I got it. But I've been carrying it around with me since probably, I would guess, 1997 I bought this thing. Yeah. No, I'm not, it's not a brag thing, 88. What I'm saying is there's an intention. The intention is different, right? So I'm showing that I do this, is what it is. But anyways, but it's Friday afternoon. Let's talk booze, right? Yeah, let me grab it and I'll be right back. Right. So anyways, so it's intention that we're talking about, right? And when it comes to intention, it changes your attitude, it changes your reasoning, it changes your aggression. It changes a lot of things, right? Anyways, so I can't even see this. I don't have my glasses on. Can you see it? I can't see it. It's in pretty good condition, right? It's pretty good condition. Yeah. But obviously, I've had to take care of it, right? I had to nurse it for all those years. Hang on, let me get this back. You 74? Yeah. Yeah, I wasn't born in 74. But I don't think I want to open it anymore. Now it's too old, right? No, I will not. But the bottle is in nearly, I would say it's mint condition. Extremely high quality. Yeah. Might be interesting to go to the vineyard and bring it to them and have somebody sign it. I'm like, hey, I've been carrying this bottle around for 30 years. They're like, what? They're like, so. Oh, Porto. I love Porto. I like Madeira as well. So anytime I'm invited on somebody's boat, I buy a bottle of Madeira and I give it to the captain as a thank you for allowing me on their ship. But that's what a captain would drink, would be Madeira. But yeah. Tawny or ruby port. I like the aged stuff, right? So you're going to, what's the Madeira teardrop or something? Madeira tears. Madeira tear. Yeah, some of them are not very expensive. I'm trying to find. It'd be typically something like this. I'd probably better quality, but there's one that sort of teardrop. I can't think of the name. I mean, I'd buy something better than that, but the teardrop one. I don't know. Rare Charleston. I don't know what that is. Anyways, there's sort of a golden one. But anyways, they age very well. They age very, very well. Right. Yeah, cigar and Madeira is fantastic. American booze in Pakistan. Yeah, that'd be something else, right? All right, so look at our Kiwi. We're at a price. Are you going to buy it? At what time are you going to buy it? And that's, again, technical analysis confirms the time through technical analysis. You should really think about technical analysis as being more of a time than a price, because price is support. Price might be fundamental. Price would be bias. But to me, technical analysis answers, when do I pull the trigger? Well, you have a double bottom, higher high. Are you going to buy down here? Okay. That's what technical analysis is telling you. And your stop's probably going to be down here. Depending, right? Technical analysis doesn't tell you should buy. I mean, you could use it that way, but I think it may be inconsistent over long periods of time. Okay, it doesn't tell you should. It doesn't. it somewhat tells you at what price level, depending on what type of analysis you're using. But even then, it's sort of a guesswork. But ultimately, it answers when do you pull the trigger. Okay. And so if you're doing the double bottom, higher high, right now you got the higher low. Somewhere in there, right? We know it's not likely to fall any farther than that. And if so, you just take a small loss. You set it up, and for whatever reason it didn't work out. Okay, back away, try again later. What's the big deal? Oh, but it'll screw up your winning percentage. Nobody gives a damn about your winning percentage. You're paid to make money. Okay? So you can't make money unless you're in it. So make the best decisions you can. Okay? Now you might want to wait until you're above this. I fully appreciate that as well. So you can get this double bottom, this higher high, this higher low, and then that for the rest of the week. That's valid too. Which one do you want? Maybe you trade the left shoulder and the right shoulder and the breach. No, it's not taper on the USD. It's reducing, right? Taper is a reduction of bond purchases by the Federal Reserve Bank's bond dealing desk at the New York Fed. Okay? And it'll probably go from 120 BPM to 80 B, right? To 60 to 40 to 20, okay? To 0. Okay? So 1, 2, 3, 4. It'll be done in 4 meetings. Okay? They're going to mention that they're seriously thinking about it in June, and they're going to start in September. Okay? Which means by 2023, we will have no more quantitative easing. But I will remind you, they told us that last year. Maybe not that specifically, but it's not a shock. But they will tell us in June, July, and August that they're going to do it, they're going to do it, they're going to do it, they're going to do it. And all summer, people are going to debate, and then it'll start. Okay. The question is, which Fed meeting? The August one? Probably not. September? Almost certainly. Yeah. No, that's all right. What do you think? What do you think? Have you guys learned anything about trading on 1 minute chart or a 5 minute chart today? Do you feel perhaps just a little bit more complete as a trader? Do you like the fact the market was dropping and I wasn't freaking out? It's the end of the world! It's the end of the world! It's all over! Like, oh, good. Good. Fine, great. Okay. Well, would you please click the thumbs up button? That'd be great. Yeah, Moreno's like not that confident trading in 1 minute. The confidence, it's to me, the 1 minute is irrelevant. Okay? Knowing that this is where you're going to buy, you just buy it. You're done. Okay? That's the issue. Okay? Like if you don't see the double bottom or the higher high, how can you set up the higher low? And you have to anticipate the double bottom. Why? Because you're bullish and you are playing off levels of support. So people are missing the fact they're still bullish. They're missing the fact that we're at key levels of support. They're missing the bottom. They're missing the higher high. And there's no way in hell they're going to have this set up in advance. And yet, this is all you have to do. Okay? The 1 minute part's easy if you've done all the other stuff. Okay? But it's not really, but it's not really the 1 minute. Dude, you could have, right? How about this? Just buy at the red line. You can do this on the 4 hour. Oh, I guess I'll buy it on the red line. Why? 4 hours from now, this 21 is going to be tickling the wick. So essentially, you bought the 4 hour 21. It's a boring trade. Look, it happened exactly the same way here. It's exactly the same thing. Big rally, giant pullback, 12 hours of pain, 12 days of gain. 12 hours of pain, 12 days of gain. Okay? But most people wake up, see red candles, and they're like, oh, I guess I'm not a bear. I guess Wayne was wrong. I guess I'm going to sell. I lost money. And I'm like, hey, I didn't expect red today. I didn't expect dollar strength today. That's really interesting. Cool. Well, set it up. Okay? That's the attitude. Set it up. Doesn't change a thing for me. Okay? See, I saw the red candle, and that's why I brought up the party. Like, I'm throwing this party at the club. I got the cabanas all rented out, and this is going to be great. People are all showing up. And I'm like, oh, and I see these red candles, the dollar strong today. Oh, awesome. I'm going to buy it, and then I'm going to go to the club, and I'm like, woo, right? How awesome. How awesome. Sweet. Love it. But I don't change the direction. I think, wow, I got a better deal than I even thought. It's like maybe in real estate, let's say you're looking at this and you're like, okay, I think I should put in an offer for $1 million. Okay? But, I want to test the waters first. So you have your agent write it all up and you offer $920. Okay? And the owners come back, how about $950? And you're like, well, how about $945? And they're like, okay, $945. And you're like, oh shit, that's amazing. I was going to give them $1 million. You're like, woo, right? Yeah. Yeah, thanks for the free BMW. Boom, right? And it's sort of like that, like, I got a better deal than I expected. Okay. But see, like, guys, I'm not talking about the 5 minute. I'm not talking about the 1 minute. And I'm not talking about the 15 minute. When you're on the 1 minute, remember, everything was already decided upon. Double bottom, higher high. What more do you need? We know it's going to come down, make a higher low. You're going to look at psych levels, fib levels, roll reversals, all that kind of stuff. So when you're trading roll reversals, when you get into this zone, let me mark it like this. When you get in that zone, very often I just buy it. I don't need a 5A cross. I don't need anything. Just buy it. It's done. I made all the other big decisions. I'm just looking at where we are in price relative to the entry, but everything else is set technically and fundamentally on much higher time frames. This is just pulling the trigger. Right? So don't get caught up on the 1 minute. It's just like buy. So if you need the 5A cross, good. There it is. So you're probably in somewhere in here, right? Sweet. Done. But to me, it's irrelevant. Okay? The harder work was done on many other time frames, and all you had to do is recognize that. The double bottom, which is based on a price. I don't remember when I drew that line, but it was a while ago. So you're like, okay, I got my bottom. Consolidation, if you want to call it consolidation, and you got the range-bound stuff. So you're like, okay, so now I'm going to treat it as a breakout, pull back, buy it, gone. Okay? That's how you use the 1 minute chart. But there's nothing else. I'm not looking over there. I'm not looking over here. Higher high, higher low, buy the dip, gone. Okay? And if you're worried, jam your stop and take a walk. Come back in 2 hours and see if it's still open. Okay? But you have to have all the other things in place first. Right? And the issue is most people don't have the conviction because they don't have the plan. They don't have the plan because they don't have the bias. They don't have the bias. They haven't done the research. They haven't done any research, so it seems random. And for them, it is random. Cool. Peace on earth. May the pips be with you. May our profits be above average. Have a great weekend. Take care of yourself. Cheers.